January 2026 is off to one of the slowest starts we've seen in years here in Orange County. And most people think that means the market is in trouble. But that assumption could cost buyers and sellers real money this year. Hi, I'm Leslie Swan with the Swan Team Real Estate. And today I'm breaking down what's actually happening in the Orange County housing market using the latest data so that you know whether this market favors buyers, sellers, or the people who know how to play it smart. Please don't forget to hit that like button and subscribe to this channel, and of course, comment below with any questions that come up. So, inventory is higher, demand feels slower, and interest rates are sitting right in the middle, which has created a lot of hesitation and confusion. But this is not a crash, and it's not 2008. In fact, there's one trend happening quietly right now that most headlines are missing, and it's exactly what buyers and sellers need to understand heading into spring. Right now, the Orange County real estate market feels slow. Buyers feel cautious and sellers feel unsure. And the headlines keep using words like cooling, stalling, and even trouble. And honestly, that reaction makes sense. January is always a quieter month in real estate. Fewer listings come on the market, buyers are recovering from the holidays, and many people are waiting to see what interest rates are going to do next. But here's the key thing I want you to understand right out of the gate. A slower feeling market does not automatically mean a bad market. In fact, some of the smartest decisions I see buyers and sellers make happen in markets that feel exactly like this, when things slow down just enough for people to think, negotiate, and move strategically. So before we jump to conclusions, let's look at what the data is actually telling us about Orange County right now, because what the market feels like and what the data shows are not always the same. So let's start with inventory, because this is where a lot of the confusion is coming from. Inventory in Orange County is at 2,703 homes, already up compared to late 2025, and it's also noticeably higher than it was this time last year. That increase is giving buyers something they haven't had much of over the last few years: choice. Buyers are no longer feeling rushed into making decisions. They're comparing properties, watching price adjustments, and paying close attention to how long properties are sitting on the market. But here's what's important to understand. This isn't a demand collapse. Buyers are still out there. They're just being more cautious, more analytical, and more value-driven. That's why we're seeing a bigger gap between homes that are priced and prepared correctly and homes that aren't. The market has not stopped. It's just become more selective. Now, one important update I want to share, because this is data that is very recent, and it's that the week-over-week data for Orange County's average market time has jumped from 85 days to 100 days on market. And that's definitely a noticeable shift. But here's the context behind that number, because this part really matters. What we're seeing right now is that sellers have already started listing their homes, especially as we have moved out of the holidays and into the early part of the year. Buyers, on the other hand, are lagging. There's usually a transition period where people go from holiday shopping to home shopping. And let's be honest, sometimes that takes a little bit of time, especially once the credit card bills start to show up. So this increase in market time doesn't mean buyers are gone. It just means inventory moved first and demand needs to catch up. And that's a very normal pattern for this time of year. Orange County is no longer operating like a traditional seller's market. We're moving into a neutral market where buyers and sellers are negotiating on much more even ground. And that's why strategy matters more now than it has in the past few years, because what works in one city or price point may not work in another. Here the data is going to get really interesting, because when people hear that Orange County's market time is around 100 days, they assume everything is slowing down equally. But market time does not mean how long one home sits on the market. Market time measures how long it would take to sell all current listings at today's buyer pace. And when you look city by city, the differences are staggering. Let's start with the slowest moving markets, because these are the ones pushing Orange County's market time higher. Laguna Beach is currently at 234 days of market time, up significantly from 196 days just a month ago. with a median list price of $4.8 million. Now that's a luxury-heavy market where buyers are extremely selective and inventory is taking longer to clear. Not because demand has disappeared, but because price sensitivity is real at that level. Now, speaking of the luxury market, here's the most extreme example in the entire county, Newport Coast. Newport Coast jumped from 123 days of market time to 990 days in just 1 month, with a median list price of $14 million. That number alone can completely skew countywide averages, and it's a perfect example of why headlines without context can be misleading. Now let's talk about markets that are holding steady or behaving more normally. Irvine is currently at 120 days of market time, down from 136 days a month ago, with a median list price of $1.7 million. Juan Capistrano is at 53 days, nearly unchanged from a month ago, with a median list price of $2.1 million, which tells us buyers are starting to re-engage, even as inventory remains elevated. Mission Viejo market time is sitting at 68 days, exactly the same it was a month ago, with a median list price of $1.1 million. That consistency matters. Mission Viejo isn't accelerating, but it's also not slowing. It's behaving predictably, which is exactly what you want in a healthy market. Now on to the faster moving end, we're seeing some very clear standouts. Brea is at 34 days of market time, down sharply from 49 days a month ago, with a median list price of $1.2 million. Anaheim Hills and Cypress are both at 39 days on market, each with a median list price around $1 million. So when you hear that Orange County is sitting at 100 days of market time, this is why context is everything. Some luxury markets are dramatically inflating that number, while many family-oriented cities are still moving quickly. And please keep in mind that LA County is at 124 days of market time, while Riverside and San Bernardino are at 138 and 134 days, respectively. If you want to know where your city or your specific price point falls, whether you're buying, selling, or just watching the market, drop the city name in the comments below or reach out to me directly at 949-444-1601. I'm happy to walk through the data with you city by city. So what do all these numbers mean for you? Well, it depends if you're buying or selling. We're seeing the same data, but buyers and sellers should be making very different decisions right now. If you're a buyer, the shift in market time is actually creating opportunity. More listings are coming on, sellers are testing prices, and we're seeing more room for negotiation than we've had in quite a while. That doesn't mean prices are crashing. It means buyers finally have some leverage again. And here's a key part. The best buyers right now are the prepared ones, the ones who already are pre-approved, who are paying attention and ready to move when the right home hits the market. Because the good homes, they're still selling quickly within days. If you're a seller, the strategy is completely different. You can't just put a home on the market and expect it to fly off the shelf anymore. Pricing, presentation, and timing matter more now than they have in the last few years. Homes that are priced right and show well are selling. Homes that aren't, they're sitting. And that's exactly why market time is stretching. And this is where I see a lot of sellers get into trouble. They chase the market instead of leading it. The longer a home sits, the more leverage buyers have. So whether you're buying or selling, the takeaway here is simple. Strategy matters more now than ever. Which brings us to the topic I get asked more than anything right now, interest rates. When people hear rates, they usually think of the headline number, but what matters more is what buyers are actually getting approved for. When I'm talking directly with mortgage lenders, and I do this every single week, by the way, many buyers right now are qualifying in the 5.75 to 6.5% range, depending on credit, loan type, and structure. That's better than where rates were at this time last year. On top of that, there's something happening behind the scenes that most buyers will never hear about. Fannie Mae and Freddie Mac were just directed to purchase an additional $200 billion in existing mortgage-backed securities. The goal of this is simple: put downward pressure on mortgage rates and improve affordability. When these mortgage-backed securities are bought, it increases demand, lowers yields, and gives lenders more room to offer better rates to buyers. Analysts are estimating that this could lower 30-year fixed rates by about 1/4 to 0.5%. And we've already seen rates dip following the announcement. Now, that doesn't mean that rates are going to fall overnight or stay low forever. But it does mean we're seeing more flexibility, better loan options, and more opportunity for buyers than we had a year ago, especially when you combine that with rising inventory and longer market time. And this is why the buy now, refinance later strategy actually works when it's done correctly. If you buy at today's price with today's negotiating power and rates improve later, you can refinance. But if you wait for rates to drop first, you may end up paying more for the same home because competition increases. Price is permanent. Rate is temporary. The smartest buyers right now aren't trying to time the rate perfectly. They're watching the market and positioning themselves early. So when you look at everything together, market time, inventory, city by city differences, and what's happening with rates, this market isn't stalled. But it's also not the same market we've been in the last few years. It's shifting. And how you respond to that shift matters. Market time is longer, inventory is building, and buyers are starting to re-enter more thoughtfully instead of emotionally. That's a shift, not a collapse. Some cities are moving fast while some are slowing down. And some, like San Juan and Mission Viejo, are holding steady, which tells us demand is still there, but buyers are being more selective. And keep in mind, it's only January, and that's really the theme of this market: selective buyers and strategic sellers. If you're a buyer, this is one of the best windows we've seen in a while to get in without bidding wars, where you will have more negotiating power and loan options that are actually improving, not getting worse. If you're a seller, this is still a good market, but only if you price and prepare your home correctly. Homes that are in desirable locations, up to date and well maintained, are selling. Homes that aren't are sitting, and that's exactly why the market time is stretching. The biggest mistake I see people make right now is waiting for perfect conditions. Perfect markets don't exist, but informed decisions do. And that's really why I make these updates. Not to scare you, not to hype anything, but to help you understand exactly what's happening so you can make the right move for you. If you're thinking about buying, selling, or even planning for later this year, I'm always happy to talk it through. You can call or text me directly at 949-444-1601 or reach out with a question below. There's no pressure or obligation. And if there's a specific city or neighborhood you want me to break down in a future update, drop it in the comments below. I read every single one. Make sure to hit that like button, subscribe to this channel, and watch this next video about how to prep your home to sell for top dollar. I'll see you in the next Orange County Market Update.